Koketso Mano, Senior Economist in FNB, joins us now to discuss these latest numbers. Good afternoon, and thank you for joining us here on Business on Point.
Thank you so much for having me.
What's driving the 3% inflation rise in June, and how much is the foot and mouth disease outbreak affecting beef prices?
Definitely we're seeing pressure coming through from food and non-alcoholic beverages inflation. And as you rightfully said, I mean, most of the pressure there was from meat. So meat was the main driver of this monthly pressure that we saw coming through on food inflation. So it does seem as though, you know, the supply side issues are starting to filter through and reflecting in the meat price inflation, particularly for beef prices. I guess what's really important to highlight with these indicators that we received today is headline inflation remains quite weak, right? It remains benign at the bottom of the inflation target range. So it does not seem as though inflation in South Africa is becoming a concern per se for the MPC. But I guess the other thing to consider is what's driving these low numbers is, you know, the fact that we had really high inflation in the post-pandemic period. And so when you compare the numbers on a year-on-year basis, you will see these positive base effects filtering through in the numbers. So that's one thing to consider. But the other more important thing to consider is the fact that we have generally very weak demand in the economy. So when you look at underlying inflation or demand-driven inflation, so what we call core inflation, that remains, you know, at 2.9%. So we see that being a main driver of really soft inflation in the economy. The last thing that's really been supportive is fuel dynamics, right? So we have been seeing soft international oil prices. The rand has been performing relatively well. So for the past 4 months, we've been seeing fuel deflation, even on a month-on-month basis. So that has been supportive to really low inflation in the economy.
Well, I was going to ask you about fuel, but you've mentioned that already. Let's talk a bit about electricity. How are those higher prices impacting households, and are there plans to address these costs?
Unfortunately, in the next survey outcome, so for July, you will see these utility costs coming through, right? And when you look at the spectrum of municipalities and what they plan on implementing, or what they have already implemented rather, because we're already in July, electricity, water, you know, all of those issues in terms of high inflation relative to the rest of the basket are going to come through in the July number. So maybe if I can preempt, you know, maybe a later question, unfortunately, what we expect for July is inflation to rise to around 3.6%, so much higher than what we're currently seeing and higher than what we've seen in the past few months. And when you look at it on a month-on-month basis, so the momentum in inflation, that will be quite strong in July. So once again, reflecting the utility cost that people have to bear with. It is unfortunately quite unbearable, especially when you think about the history. Electricity, utility costs have been much higher than average inflation. So that has been driving higher you know, costs for the average consumer, and I don't think we have an end in sight quite yet. What we really need to see is these electricity reforms coming through, maybe reforms at the municipal level, and that could start to change the pricing behavior, especially if you have competition in the market. That could change the pricing behavior, and hopefully maybe in the medium to long term, we could start to see lower electricity inflation, lower general utilities inflation, and that would be quite a relief for the average consumer.
Koketso, how do you think these US tariffs are impacting our inflation rate, and then going forward, how they will be impacting our inflation rate in the coming months?
Yeah, that's a very interesting question, because I think that's top of mind for a lot of people. We've been talking about tariffs since Donald Trump won the presidential election last year. And I guess the initial anticipation was that there's going to be this blanket-wide approach to applying tariffs, and, you know, we're going to see high inflation across the globe. But I guess, you know, coming into this year and we get more information, we're starting to see a more nuanced approach to applying these tariffs. Unfortunately, South Africa is looking at a relatively high tariff if we don't, you know, secure a bilateral deal, or, you know, manage to at least negotiate even for specific items. If you think about vehicles, for example, which is quite exposed to the US market. But that's mostly a story around growth, employment, because obviously these industries will be impacted in terms of demand from the external sector, especially if we're not getting preferential access to the US market, or even maybe it's harder for us to access those consumers. So for South Africa, it's mostly a growth story, unfortunately. When it comes to inflation, what we're thinking so far is that it will be the countries that are implementing import tariffs that will face the initial impact of high inflation. But you can imagine, for a lot of producers, what we're hearing right now is that you can't just fully pass on 40%, 30% increase on the US consumer, because you don't want to reduce your market share, for example, or even lose those consumers. So what producers are planning on doing is to spread the increase. So cross-subsidization across different markets. And maybe that's how we experience higher inflation. Think, for example, services, Microsoft, all of these US-based companies could be implementing higher tariffs, and as a result, we would be experiencing that inflation as well. But there's a counter factor here for countries such as South Africa. If our trade leans more towards China, so countries that are experiencing deflation or weak inflation, we could import, that disinflation, and that could be something that mitigates the impact from countries such as the United States. So it's still a very uncertain environment, and we're still figuring out the exact impact, but we think that, on average, we could probably be buffered from that impact.
Koketso, well, thank you so much for joining us. So many more questions, so little time. Koketso Mano, Senior Economist at FNB.